Dive into this jobs report and the road ahead with Don Desjardins. She's chief economist at Deloitte Canada. Don, great to see you. What was your reaction to the jobs numbers today?
Well, I think it's more of the same. You know, we had job creation, which is always good, but it's pretty mild. And when we look at sort of even just the margin of error, like, these are very volatile data. So it's not really showing that much growth in terms of job creation. The unemployment rate, as you said, moving up again. It is a softening labor market, I would say. Even data we got yesterday, looking at the job vacancies, there again, they've come down. So they're still elevated. So still companies posting, jobs that they need to fill. But having said that, those numbers continue to fall down. They're about 30% lower than they were this time last year. So all signs, I think, of a softening.
And since everybody's trying to figure out where the economy is going and the impact from interest rates, which carry other complications for the economy, it feels like at this point we probably have to have a more robust conversation around immigration to make sense of positive jobs numbers, which you referenced, because I think coming into today, I was trying to do the quick math. We've created something like 430,000 jobs this year, but I think a lot of people are aware. I mean, going back to this summer, there were more than 1 million new Canadians year over year, and even going into next year, we're looking for 485,000 new Canadians. So we got 1 month left in this year, and we'd need a really strong December to match the overall number of new Canadians coming into the country next year.
Yeah, and I mean, it's where we are in the cycle. I mean, we know we need immigrants to come to Canada, and that it's a medium-term goal, right? We have an aging population, as it turns out, and we need to have people who are in that core age. And that's really 2/3 of people coming to Canada. They're in that core working age group. A further 17% are the future workers. Yeah. They're less than 15. So, this is all happening, unfortunately, at a time when our economy is slowing. So when you look at GDP per capita, for example, those numbers have been terrible for quite a period of time now because we've had this slowing in our economy. And so when you look forward, I think it is the case that we'll probably have slow growth again in Q4, perhaps a small negative. And as we go into the early part of next year as well, I think it's really a question of an economy that's coming off the boil by design. And as we start to see inflation continue to ease, I think we can look forward to lower interest rates and stronger growth.
Well, I want to ask you about where interest rates could go, but I think that the jobs market is interesting because sometimes people say it lags, but also people are looking for a turn. Not that anybody wants jobs to be lost, but we're increasingly hearing about these kind of announcements. We heard it out of the banking sector this week, and if the jobs numbers technically stay positive, again, because we have a long-term story which involves bringing new people to the country to grow that number. If the overall numbers don't suggest that you're seeing sort of a complete deterioration in the jobs market, how does the Bank of Canada assess the numbers to determine, to your earlier reference there, what the right level of interest rate should be?
Well, I think for them, what they're looking at is what are people thinking about inflation? It's inflation expectations.
Get it off the brain.
Yeah, well, and I mean, we look at the surveys and they say, okay, the Bank of Canada conducted one in the late summer, and where's inflation today? People are saying 6.5%, but it wasn't 6.5%. It was more like 4%. So, what they, I think, are trying to do is to convince people it's going to be 2% in the medium term. We're going to keep rates at levels that will slow the economy and get that inflation rate down 2%. So, they're looking at the economy. They know it's slowing. They know the consumer is quite weak. So I think from the perspective even of these data points, I don't think it suggests that they're going to have to raise rates further. I think they are on the right trajectory.
What about what I was alluding to earlier, that, I mean, we've got a rate decision next week and they're expected to hold rates steady, but you've got a growing number of economists who are predicting rate cuts next year. What are your own expectations for next year?
Yeah, we have 3 rate cuts next year.
3. Okay.
Slow, because until we actually get to 2%, I think the bank will be very leery about injecting too much stimulus into the economy and getting us back into that really rapid growth. So I think it's going to be the case that, they'll take their time before they implement any rate cuts. Probably in the second quarter, maybe even late in the second quarter, and then just move in quarter increments in the next couple quarters, really just trying to ensure that inflation expectations are really grounded to that 2% target.
Dawn, great to get